Welcome back. So today I want to look about the accounts from incorporate records. So we are going to find that the small sole proprietorships and the partnership businesses very often they maintain this double entry bookkeeping system. So we will find even sometimes they keep record only for of each transaction and credit transaction. So let's delve in and look at the features. So it is inaccurate, unscientific, and unsystematic method of recording business transaction. Another feature is that there is generally no record of real and personal accounts, and in most of the cases, a record is kept for cash, transaction, and personal accounts. Then there is no uniformity in maintaining the records, and the system may differ from firm to firm depending on the requirements and convenience of each firm. Then profit under this system is only an estimate, and therefore true and correct profits cannot be determined. So that is the features that we are going to find in the most of these incomplete records. So let's continue. We are going now to look at the types of incomplete records. We have a few. So there is this one referred as pure single entry. So in a pure single entry, only personal accounts are maintained with the result that no information is available in respect of cash and bank balance, sales and purchases, among others. So it's only personal accounts that are maintained in a single entry. Then you have the simple single entry. In a simple single entry, the personal accounts and the cash book are maintained. So here we the sole proprietorships they maintain two books, two accounts, the personal accounts and the cash book. And these accounts are kept on the basis of double entry system. So posting from cash book are made only to personal accounts, and no other account is to be found in the ledger. And then you have the quasi single entry. So here the personal accounts, the cash book, and some subsidiary books are maintained. So here it's like the three accounts are maintained. So the main subsidiary book kept under these systems are the sale book, purchase book, bill books. So those are the types that you can find in the incomplete record. Okay. Let's look at the ascertainment of profit by capital comparison. So how are we going to ascertain this? So it can also be known as the net worth method or statement of affairs method, whereby the closing capital minus the opening capital we get the profit. So in preparation of statements of affairs, we require listing up all the assets and liabilities and the account. So the accountant will utilize the cash book for cash balances, bank passbook for bank balances, also the personal ledger for debtor and creditors, stock by actual counting and variation. Then you have as regard fixed asset, he prepares a list of them. So these are the things that accountant will utilize in order to prepare this the statement of affairs. So let's continue and look at the differences between the statement of affairs and the balance sheet. So we are going to look at the basis, the statement of affairs and the balance sheet. So on the basis of reliability, the statement of affairs it is prepared on the basis of transactions partly recorded on the basis of double entry bookkeeping and partly on the basis of single basis. So, and on the balance sheet, it is based on transaction recorded strictly on the basis of double entry bookkeeping. So those are the difference on reliability. Then you have the capital statement of affairs. Capital is merely a balancing figure being excess of assets over capital. But on the balance sheet, capital is derived from the capital account in the ledger, and therefore the total of asset side will always be equal to the total of liability side. Then you have the basis of formations, where since this statement is prepared on the basis of incomplete record, it is very difficult to locate the asset and liabilities if they are omitted from the book, especially on the statement of affairs. But on the balance sheet, there is no possibility of formation of any item of asset and liability since all the items are properly recorded. Let's continue. On the basis of valuation, statement of affairs, the valuation of asset is generally done in the arbitrary manner. So therefore, no method of valuations is disclosed. But in the balance sheet, the valuation of asset is done on the scientific basis. That is original cost in the case of new assets and depreciated amount on the basis of cost minus depreciation to date for used assets. On the basis of objects, the statement of affairs, the object of preparing these statements in the calculation of capital figures in the beginning and at the end of the accounting period, respectively. The objects of the balance sheet is preparing the balance sheet is to ascertain the financial position of a particular date. So these are the few differences that you can talk about the statement of affairs and the balance sheet. Then you have the techniques of obtaining complete account information. So there are some of the techniques that you can use to obtain this complete accounting information. So you have the general techniques where accounts of business are incomplete. So it is advisable to convert them first to the double entry system and then to draw up the profit and loss account, the balance sheet, instead of determining. So I was saying about the general techniques. It is advisable to convert them first to double entry system and then draw up the profit and loss account, the balance sheet, instead of determining the amount of profit and loss by preparing the statement of affairs. Then we have the derivation of information from cash book. So that is also another technique that you can use, whereby we analyze the cash as well as the bank receipts and payments. So those are the analysis that we should do, very extensive but under significant heads, so that the various items of income and expenditure can be posted therefrom into the ledger. Then you have the analysis of sale and purchase ledger. So that is also another way that you can use. So you can use about the sale ledgers, the purchase ledgers, and we obtain the required information. Then we have the identifying. We have the distinction between business expense and drawing. So we also have to determine all those, the distinction between the expenses and the drawings from the business. Then you also have to identify fresh investment by proprietors or partners. So we are going to have to determine that so that we can understand that which are the fresh investment done by the partners. So, or the money collected and put in the business for maturity. So you have to determine that. So those are the techniques. As we continue, hope you are taking some screenshots and few notes. Please write in the comments below. I'll get back to you. Okay. Let me look at the formats of the statement of affairs. So there are these statements of affairs. So we start with the title. You have the statement of affairs. So we have the two sides, the liability side and the asset side. So we are going to on the left side we are going to start with the liability, whereby we start with the capital or the balance figure. Then you have the loans, bank and overdraft, the sundry creditor, the bills payable, outstanding expense. So all these are the liability sides. On the assets, we have to get the assets. So we have the buildings, machinery, furniture, stocks, the debtors, bill receivable, loans and advance, cash and banks, prepaid expense, all the assets. The accountant has to list them as well as the liability. Then he obtain the balancing figure and also the total amount, as you can see. So in order to understand this, let's take this illustration below and see if we can get something out of it. So illustration, you have assets and liability of Mr. Somia Kenya 13 to 2017 as follows. So we have the assets and liability for these 2 years. So we have the assets, building, furniture, stock, study data, cash in hand, bank, liabilities. We have loans and study creditors. So we are going to utilize the same format as you can see above. So can get a minute, take a screenshot of that question. Then additional information, we are told decided to depreciate building by 2.5% and furniture by 10%. So one life insurance policy for the proprietor was matured during the period and the amount was 40,000 is retained. The business proprietor took 2,000 per month for meeting family expense. Prepare a statement of affairs. So this is what we are going to do in our solution. So we are going to draw the two sides, on the liability on the left side and the asset on the right side is the both years. So our liabilities, as you can see from our question, we are told we have loan and sundry creditors. Then we also have to bring the balancing figure or the capital. So the capital was, let's look at it. Is the balancing figure that we are going to calculate. So we are going to start with the loans and the sundry creditor. So it was 100, 4 and 40, then 80 and 70 for the 2 years. And then we have the assets. We are going to bring the assets as they are in the question. So we start the building. From our question, we have building 150 for 2016 and 2017 we don't have. So, but we are told we decided to depreciate the buildings by 2.5% and furnitures by 10%. So we are going to get the 2.5% for 100. So So the 2.5 multiplied by 100, you're going to get the 2500. So then you subtract the 100. You get 97,500. Then you have to get the 10% of 50,000, which is 5,000. You subtract, you get 45,000. So that we get the depreciation amount for each building. But we are told that and the furnitures, and then we subtract so that we get the amount for the following year. Then the stocks, started debtor, cash in bank and cash in hand, that we have been given for both the years. So from 120 to 70, all that, so you indicate as the year. So the total of 2016 will be 381,200, and that of 2017 590, 700. So when and you have also to get the total for liability sides. So the balancing figure that we are going to get on the deficit, it is the one that you are bringing on the here on the capital side. So we are going to see it is 241,200, and for 2017 is 440,700. So that is the capital, the balancing figure, or the deficit. So this one, the capital balancing figure. So as you can see, that is the statement of affairs. So I think you can take a screenshot, especially on the solution. So if you have any question pertaining this subtopic, so reach to me and also comment below as we go on. Let's hope and study for the future. Okay, thank you.